Hello and welcome back to Morning Markets from True Potential. Paul Durrance, Investment Director. If we start by looking at how financial markets performed last week, we saw positive returns from equities. US equities outperforming, up 4%. That's the second consecutive week of positive gains. We saw positive performance within the UK market, UK equities up over 1%. Positive returns were also there in global government bonds, but UK gilts outperformed, and we saw a rally within the pound as the new Prime Minister was announced. At the sector level, we saw quite a bit of divergence as US companies reported their financial results for the quarter and gave their outlook. US technology stocks, the likes of Meta, Amazon, Google and Microsoft, disappointed in parts in terms of their earnings and sales, but also disappointed in terms of their outlook for the end of the year. On the positive side were industrial companies, the likes of Caterpillar, who reported on Friday, continuing not only delivered better than expected earnings, but continued to show resilient profit margins, and their outlook for the year end was very strong. In terms of economic data on Friday, we had more inflation data. Inflation continues to be very high. When we look at the PCE inflation series, which is the one that the US Central Bank follow and project on, the data showed that inflation came in slightly below expectations when we strip out the volatile components of food and energy, coming in at 5.1% year on year or 0.4% over the month. When we look at just the headline level of inflation, that came in at 6.2%. So still very high, but consumers are continuing to show strong spending patterns despite the higher prices. They're still benefiting from having a high cash reserves in parts, but also benefiting from the wage growth that is coming through within the US. In terms of the week ahead, a big week for markets and central banks. We have the Bank of England, the Federal Reserve in the US and the Central Bank of Australia all meeting this week, where they'll be determining where the appropriate level of interest rates is. For the Bank of England, we're expecting 0.75% interest rate increase, and similarly we're expecting the same from the US Central Bank. Investors will really be looking for clues not only of what they say, but in terms of where they guide the market in terms of future interest rate hikes. On Friday, we'll also get US jobs market data. Really important because the labour market in the US and globally is very strong, which is pushing up wages, and that's feeding into the inflation narrative and dynamics. If the US labour market continues to show strength on Friday, then the interest rate hikes that have already come through in the US aren't having the desired effect of cooling the labour market, and therefore I expect the markets to price in more aggressively in higher interest rates, which will create a bit more volatility. A lot of ifs there, and we'll keep you up to date through the course of the week to inform you of what happens. That's everything from us today. Thank you for listening, and we'll see you tomorrow.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.